What's up, Spark Investors? It's Kevin, and today we're going to go over our Robinhood portfolios. If you're already a subscriber, welcome back to the channel. If you're not, make sure to do so now and hit that notification bell so you can stay up to date with what we got going on. And then make sure to hit the like button if you like this video. It helps grow the channel and share it with other people. Alright, so let's dive in. So I have my portfolio sorted by the number of shares that I have in each company from greatest to smallest. So up first, I got Oxford Lane Capital. I have 70 shares with an average cost of $4.55. I'm down $28 on it right now. They pay monthly dividends. They're paying a little bit more than 6 cents right now. They were paying at 13 cents, which was not sustainable, so they had ended up having to cut it. It was trading around $8, $9 before the coronavirus, so hopefully it'll get back up into that range, and if not, it should be paying me dividends every month, and I should eventually at least break even. Next, I got AT&T. I got 16.21 shares at an average cost of $30.41. Right now, I'm down $4.50, but the amount of shares that I have, the dividend date just hit, so I should get about $8, $9 from that. Up next, I got Prospect Capital. This was actually, I got about 4 or 5 free stocks on this. I have 15 shares currently in my Robinhood account, so the average cost is $3.69. They're also paying about 6 cents every month, and I'm up about $16 on this right now. So then I got 12.97 shares of Wells Fargo at an average cost of $29.39. So this is my worst one right now, so I'm down $50 on it. The banks did stress tests, so they're not allowed to pay more out than that they can, so dividends are going to get cut, so a lot of people are backing out on that. Interest rates are at an all-time low, so they're not making as much money. So one of the first shares that I bought when I started this journey was Carnival Cruise, so I ended up getting 10 shares at $10.24. So it's been doing pretty well for me off and on. Right now I'm up about $60 on it. It's going to be a long haul to get back into the cruise, but I tried to get in on some of those industries that were hit pretty heavily. Up next, I got Discover Card. I got 6 shares of it at an average cost of $46.91. I'm up about $9.50 on it. Like we said in our previous video with the corn shortage, cashless becomes a big thing. Credit cards will be a big hit. And Discover Card is great for those customers that don't have that great credit or don't have very much established credit. It was one of my first credit cards, so take a look at our corn shortage video, and the link's in the description, but I think Discover Card's gonna be a good play. Like I said, I got out a bunch of those entertainment stocks and travel stocks, so I got 6 shares of Park Hotels and Resorts. They do the Hilton hotels. Got an average cost on $8.27. I'm up about $8 on that. Another industry that was hit pretty hard was oil, so I got 5 shares of Murphy Oil, and I'm up $21 on that with an average cost of $8.70. I had a little bit more oil in my portfolio, but I've kind of sold it off when it was starting to get really high. Up next, I got 5 shares of IVR, average cost of $2.67. I'm up about $3 on it. Up next, we got Helion, or the Tortoise Acquisition Corporation, SHLL. I got 4 shares of that at $17.74. I'm up about $36 on that. We did an analysis video a few weeks back on that, so link in the description on that. And we're going to have an upcoming video. Make sure to hit that subscribe button. I got 3.03 shares of CBS. So I bought 3, and then I got 0.03 in dividends. My average cost is $16.83, and I'm up $18 on that. I got 2 shares of Ford with an average cost of $6.16. I'm down 19 cents on that. I'm probably going to be buying a little bit more into that. I had quite a few shares, and I ended up selling off on those. I think I used that money to invest in Helion, which so far that's been a good change for me. I got 2 shares of Regions Finance. As you heard in my previous video, that I got those on Webull, and I started looking into that. So again, the banking industry has been hit pretty hard as well recently. So I got 2 shares of it at an average cost of $12.10. So I'm down $4 on that investment. Alright, these next ones have just been free stocks, so I got 1 share of each one of them. I got 1 share of Halliburton, so about $12 on that. 1 share of Plug, I'm up about $9.25 on that. 1 share of Coddy, and I'm up $4 on it. Again, all of these are free stocks. I plan on holding on to Halliburton and Plug. I'm not sure about Coddy. I would have to look into that one a little bit more. I just got confirmation that I can start trading it on Monday. So I don't know if I'm going to hold it or sell it. So let me know down in the comments what you think about this company. I have one share of SPHD. It tracks the S&P 500. It's the high dividend, low volatility ETF. Then I got some fractional shares of VU. It also tracks the S&P 500. I got about $50 into it. I'm up about 70 cents right now. $10 worth of Square, so I got fractional shares on it, and I'm down 17 cents on it right now. And last up, I got 194 shares of, wait for it, Doge. So I got about 70 or 80 cents in this. I couldn't buy anything else with it, and there was a lot of hype around that, and Trace was talking about it. So I bought into that, and I'm down 17 cents on that right now. Thanks, Trace.
What's up, Spark Investors? It's Nathan here. Today we're going over my Robinhood portfolio. So if you watched our last portfolio update, I still have a couple shares of Gush. However, I've sold 2 in order to pick up 4 shares of Shill. I managed to get in at about $19. Excuse me, I actually got in at $16. However, I sold a share and then bought back in at a slightly higher price. So I gained a little bit more money, but it raised my average cost. But I'm still up $12.73 overall. And then you kind of move into Nikola. This one was the old hype stock. I only own about 12% of a share. So the reason I didn't sell 100% of my shares, because I believe I had 3 or 4 of them, was because I was hoping that maybe they'd uncover some kind of good news and shoot back up off of hype, so I could even cash out even more. But it doesn't look like that, so I'll probably have that one sold for my next update. I want to get into Airlines, so I bought one US Global Jets ETF. I got in at about $12, and it's up $3.84 right now. So had I been paying attention, I could have day traded that one quite often, because it swung up to $16 and $18 on numerous occasions, and I just yet to capitalize on that. I'm still sitting pretty heavy on MFA with a solid $46 return on it right now. I'm hoping to see it rise back to pre-COVID levels around the $6 to $7 mark, and also potentially cash in on some of their dividends once they start doing it again. IMAX, I just felt like movie theaters was a pretty solid one, so I went with IMAX since they sell 2 movie theaters. Cron is probably my biggest flop out of this whole entire portfolio. About 3 or 4 years ago, I bought it literally at its all-time high when I was in college, and I failed to sell it whenever it started crashing, and so I sit today with a $31 loss on the stock. However, it's not part of the 420 I put in a couple months ago when I started this journey. PDS, I managed to get rid of 15 shares of it to regain my initial investment, and so I'm just kind of sitting on this, the remainder of these 17 shares. I went ahead and placed another limited sell for $1 each to go ahead and cash out and get out of it, because it doesn't look like it's going to do me much good once it hits its original value. So this Redwood Trust and Investor Mortgage Capital and New York Mortgage Trust, all these are real estate stocks, kind of like the MFA. They're all based in New York, so I'm up on all 3 of them, I believe, and they also pay decent dividends, so I will probably end up getting rid of almost all of every single one of these once I get back up to around pre-COVID levels, although I believe I'll hold on to this New York Mortgage Trust for their decent dividends until they stop paying. Then that leads me into APHA. This is one recommended to me actually by Kevin. I'm up quite a decent chunk of change on it right now. This one is a marijuana company, and I ended up buying in because Kevin found this one, recommended it, and then also ended up buying a few more just simply because there were some rumors that marijuana would help with the treatment of COVID, and the stocks respond to the hype, and they've remained up above that level, so that's a good sign. This cost is just an energy company. I'm just kind of sitting and holding to see how much I can get out of it. I'm up about $7.56 on it, so pretty solid. This NR, I believe, is another energy company. I kind of went heavy into oil and energy on the crash, just simply waiting for them to get back up, and I'm already up on most of them. However, I haven't cashed out my position yet because it's not quite to the level I want it to be at. Ford is part of my dividend portfolio goals, so I'm sitting on 5 shares of them. I will continue to add more shares of them as I can. I believe they have suspended dividends for right now. However, they should pick it back up once things kind of get back to normal. This OXLC, I believe, is another real estate company. It's a bank. They pay decent dividends at the moment. They have a pretty high payout rate. However, it looks like they'll probably be suspending it here after a couple months, so I'll probably be cashing out of this one since I'm already up a decent chunk of change on it. OGI is one of my marijuana stocks. This OAS is probably well, I'll take it back. I'm actually up on it. I was down a little bit on this one right now, but I'm not up much. It's on one of my energy / oil companies. Sandal is another marijuana company, and then NRO, I believe, as well. So it's Eric. If you have seen one of our previous videos, I talked about how I would invest in this one for 5G, and that's one I'm holding on to because of that. I'm only up about 92 cents, but this one is for the long haul, so I'll probably be trying to get out of that one sometime, either another year or maybe 2 to 3 years. I'm just hoping to see it continue to climb because they do deal with international 5G hardware, which everyone's converting to, so should see that go. And then once you get this SPFF is also part of my dividends. They pay out monthly dividends. They've missed the past couple months because of COVID. However, it looks like they stay pretty steady, and their stock value stays around this 1050 range, and has for quite a while now. And even over the past 5 years, it's dropped a little bit, but it stays stable for very long periods of time before it drops. So I'm not really worried about it increasing value. I'm just using it temporarily until I can invest in better things. So these next ones, as you can tell, I have partial shares of all these. AT&T is the T, this KMB is Kimberly-Clark, Walmart, Apple, Lockheed, and that was after this next is one of my free stocks I got from someone signing up. So if you haven't already signed up, use our links down below. Go ahead and take a moment, sign up, use Robinhood link, and you'll get one free stock. If you use our Webull link, you get one free stock for signing up, and then one free stock for your first deposit. Also have a little bit of Tesla. I have about $6.48. I'm up about 89 cents on it. They've been hyped up pretty big, so I've only put a couple bucks in it, as you can tell, but every little bit helps. And this SIN was also one of my free stocks that I received. So that sums it up. And stay tuned for just a moment, and you'll be able to see my total gains for the past couple months.
All this up, I've been totaling up what my actual investments have been. So I've sold some Walmart stock. I've put in some money from Coinbase that I got for free. I put in some money from that Doug bonus. Thanks, Doug. So I got about $16.62 in it, and I plan on putting in $100 every paycheck, so bi-weekly. And right now I'm up $439.70.
Overall, for my $420 investment, I'm up to $686. Last time I believe I was around $720ish. So there's a couple of things I missed this past month. I missed a few opportunities to get out of my position and then rebuy back in at a lower price. I'm still learning how to not really predict, but tell when it's a good time to get out and time to get back in. As I've gotten out of some positions and paid the price and have to pay a little bit higher price to get back in on the position. And other times I should have got out and things went down. And so I'm still learning overall. However, for the past 3 months, I'm up 55%. And then for the past year and overall, let me just go and switch over that, I'm up 42%. And that's counting my big screw up in college when I bought into a couple marijuana stocks and failed to pay attention to them. And they've just kind of sat there and lost over, I think it was like 80% of their value. So overall, not too shabby still, from 420 to 686. So if you haven't done already, make sure to like, comment, and subscribe. And then make sure to use our affiliate links down below to get started investing today.